Hello and welcome. My name is Paul Wallace. I'm the Africa editor at the Banker magazine, and I'm here in Marrakesh with Arunma Oteh, the Director General of the Securities and Exchange Commission of Nigeria. Arunma, thank you for joining us. Firstly, a lot has happened in the Nigerian capital markets since the country's banking crisis of a few years ago. What have been the main changes in Nigeria's bond and equity markets since you became head of the SEC?
Thanks, Paul. Several. First, I think there's an understanding of the importance of the capital markets in terms of providing medium to long-term finance, not just by policymakers, but by the generality of Nigerians and global investors. What has happened? First, the markets are doing very well. In 2012, our stock market rose by 35%. Year to date, it's risen by more than 30%. And what is different is that previously it was very much driven by a particular sector, the banking sector. What we're seeing now in our stock market is that it's broad-based. It's being led by seasoned blue-chip companies, conglomerates that are very well-known names, the Unilevers, Nestle's of the world. The banking sector is doing very well. The cement and construction companies are doing very well. Breweries are doing very well. So there is breadth. I think people want to participate in the growth story that they're hearing for Nigeria. And of course, the best way to wet your feet is through the capital markets, because they're public markets, they're transparent. There's an apex regulator that wants to ensure that our markets are of the highest integrity. The second thing, which I think is very significant, is that there is also breadth in the participation in our markets today. You have local investors, both institutional. We have a pension fund industry that's a $20 billion industry, and they're looking to diversify their portfolio and have portfolio that matches the profile of their liabilities, and equities is very important in that regard. So we've seen confidence return to the markets since January 2010 when we started the reform agenda. The bond markets are doing very well as well. The reason is because of what our President Goodluck Ebele Jonathan, has been leading, a broad transformation agenda, which one of the hallmarks is macroeconomic stability. The central bank has done a good job in controlling inflation, in stabilizing our exchange rate. We have our state governments also actively raising funds for infrastructure from the capital markets. One of the things we like at the SEC about that is that it's also further entrenching our democracy, because the process of raising money from the capital markets means you must be more accountable, you must be more transparent, and therefore, because your financials, you must have a track record of strong financial management. You have independent parties like rating agencies that assess you, not just on your finances, but what you're doing generally. So for a citizen of Nigeria, other people are also holding their leaders, holding the feet of their leaders to the fire, as you say.
Lastly, Nigeria's economy is growing very quickly, and most analysts predict that within 5 to 10 years or so, it will overtake South Africa to become the biggest economy on the continent. Do you think it's inevitable that Nigeria's capital markets will also become the biggest in the continent in, say, a time frame of 10 years or so?
There's no doubt. The reason is actually because our capital markets today don't fully reflect the economy. In terms of representation of our GDP, it's between 17 to 30%. We don't have any utilities listed, neither power, neither telecommunications. Some of the large companies that have done very well over the last 10 years have been telecom companies. Oil and gas is a very strategic sector for Nigeria. There is a process of encouraging indigenous seasoned players. We expect to see some of those players come to the market. We believe that given some of what we're doing in developing an ecosystem for supporting small and medium-scale enterprises, we're going to see a number of family businesses take the example of a Honeywell or an Aliko Dangote and list their companies on the market. So we hope that the time frame is actually shorter than 10 years because our expectation is that the market will reflect the economy better, and that it's also very useful as you entrench in a democracy that there's more transparency and accountability. And what our dream is that companies at a certain level in terms of turnover that impact the environment, that enjoy the benefits of such a large economy, will certainly list so that they can undergo the same best corporate governance practices that you have anywhere in the world. So we're very excited. It's a large economy. There's a bit of it that is informal, and what the capital market does is formalize the economy and create greater transparency, democratize the success of most companies, and address some of what we hear all over the world has become an issue, which is the income inequalities, which, if not managed, can lead to social unrest. So we believe that it is important that the average Nigerian can learn to also invest in the market as we prepare for a much bigger market. You don't create wealth by being a civil servant. You create wealth by running your own company or investing, like Warren Buffett, in others who run their own company. So the picture is very, very positive. But there are risks, and there could be surprises. And what we feel our role is, because our mandate is investor protection, is to make sure that those surprises don't happen. But if they happen, that not just us, but that the average investor is ready for when those surprises happen.
Arunma Oteh, thank you very much for joining us.